Accounting Superstars. This is Professor Don Bush. I've been a professor for about 30 years, CPA for about that long, and I've got great ways to explain accounting. Welcome to the Accounting Superstar channel. Hey, today's lesson is designed for students in their very first semester of accounting and who are struggling with inventory. Inventory can be a little tricky at first, but I've got a great way to explain it, and I'm sure you'll get the hang of it here. So today's lesson is focused on the weighted average method of determining ending inventory and cost of goods sold. So let's get started. Here we go. We've got Fred's Snowblower Service. Fred's Snowblower Service sells and repairs snowblowers. Based on a true story, but the names are changed to protect the innocent. So here's what I've got. I've got a chart of all the activity that Fred had during the month of January. So what we have in dark blue here, we have January 1st, beginning inventory. So Fred had 10 snowblowers in beginning inventory. Those snowblowers cost Fred $750. So 10 times 750 is 7,500. And then on January 3rd, Fred made a purchase. He bought 8 snowblowers for $760 each for a grand total of $6,080, and so on and so forth. So everything in blue here, these were purchases. Now in the pink salmon color, we have sales. These were sales, and these are at retail prices also. So on January 4th, Fred sold 2 snowblowers, each at $1,200, and for a grand total of $2,400. And then on January 7th, he had a sale of 3 snowblowers, and he sold those for $1,000 each, grand total $3,000. So everything here in the pink salmon color are sales. So coming down here, what we're going to do is we're going to first figure out, well, how many snowblowers did he sell and what was the retail price of the sales? So all we would do is from our upper chart up here, we would say, okay, he sold 2 and he sold 3 and another 2 and another 3. And we would add up all the sales, and we get a grand total of 26 snowblowers sold. Now, the retail price, well, we do the same sort of thing. Is we would take $2,400 in retail sales plus $3,000 plus another $2,400 plus $3,300 and so on and so forth. Just add up the numbers that are highlighted in the pink salmon color. And the grand total sales is $31,300. There we go. So these are at retail prices. Now, our next job here is to figure out, well, what is the ending inventory and cost of goods sold? And there's different ways to do it. Today's method is we're using the weighted average method. It's really, really easy. So here's what we're going to do. We're going to take the information from this upper chart and we're going to simplify it. All we're going to do is take the items that are highlighted in this dark blue and white print, and we're going to transfer them down to another chart. We're going to leave behind all of the sales numbers. So here's what the simplified chart looks like. Here we go. There we are. So let's go up and grab those numbers and bring them down. So I'm going to split the screen, and what I'll do is I'll go up to that first chart and we'll grab the numbers. So here we go. Beginning inventory, 10 units. All I'm doing is bringing the numbers down. Cost per unit, $750. And if you're saying, where are you getting the $750? I'm getting it from right there. Now, 10 times 750 is 7,500. And then we have a purchase of 8. So I'll bring down that 8. And it's at 760 each. And 8 times 760 is a grand total of $6,080. So we would just repeat this for all of the purchases. We do the same for January 5th, the purchase of 4 at 780. And so I'll just highlight all these numbers here so we have them. So all I did was copy them down. So all we're doing is we have beginning inventory and all the purchases. Now in the gold boxes here, what we're going to do is we're going to add up the number of units and add up the total cost. And if you notice, we don't have to add up the middle column. In fact, we never have to add up the middle column when we're doing these problems. So let's add up the number of units. If you add them all up, you get 40. And that is from 10 plus 8 plus 4 plus 6 and add them all up. And over here, the total cost, if I add up the 7,500, the 6,080, so on and so forth, I get a grand total of 31,460. All right. So we're practically done. I told you it was easy. So this is called the weighted average. So what we're going to do is we're going to find an average. So here's what we would do. The important numbers here are the numbers highlighted in gold, the 40 and the 31,460. So to find an average cost per unit, all we would do is take the 31,460 divided by 40. That's all we do. So here we go. 31,000 divided by 40, and we get 787. Now there might be some pennies. I did a little rounding. But to figure out the cost of goods sold, it's really, really easy. So here's what we do. So coming down here to the cost of goods sold, what we need is the number of units sold. And we did find the number of units sold right there, 26. 26 were sold. So I'm going to just put 26 right there. In fact, I'll just change the print. There we go. And you know what I'll do? Since we're done with that upper chart, I'm going to get rid of the split. All right, so we've got cost of goods sold, 26 units were sold. Now we're using the weighted average cost, which we've determined to be 787. The way we did that was 31,460 divided by 40. So all we'll do is let's just put it right in the spot here and do a little multiplication. So 26 times 787 is 20,449. So in other words, our cost of goods sold on our income statement, cost of goods sold is an expense, and going to go on the income statement. Only two things on the income statement, revenue and expenses. We'll put 20,449 for cost of goods sold. Now to figure out ending inventory, that's really easy. We had 40 available for sale. We sold 26, so how many do we have left? 14 are left. All right, there you go. So we can figure out the ending inventory the same way. 31,460 minus 20,449, and we get 11,011. And another way to do it too, and we could be off by a couple of pennies and whatever, rounding errors, is we could say, well, what's the weighted average cost of these? Well, the weighted average cost is 787. And we could go 14 times 787, and we'll get something really close to $11,011. So that's all there is to it. It's just that easy. So what I'm going to do, though, I'm going to put make a little summary table, and the sales coming from the upper chart here, sales were 31,300. So let me put that number down here. Cost of goods sold was 20,449. Got it right from up here. And so therefore the gross profit is simply sales minus cost of goods sold, 10,851. So there it is. And finally, our ending inventory, which will show up on our balance sheet, is $11,011. So ladies and gentlemen, we solved the problem here. We figured out our ending inventory and cost of goods sold using the weighted average method. And we're using the periodic system. And you might say, what's the periodic system? Well, what the periodic system is, periodically we count our inventory. It's just that easy. All right, hope you enjoyed the lesson. Hit that subscribe button. Also, I've got a website, accountingsuperstars.com. I've got all these videos classified and sorted out by topic. So go to accountingsuperstars.com and it'll be a lot easier for you to find good accounting videos. So hit the subscribe, like, and until next time, over and out.